Hello and welcome to our Friday edition of CMS Forex News. I'm your market analyst Nick Nassad, and today is May 15, 2009. We begin with news from Japan, where orders for machinery and equipment used in factories fell 1.3% in March, following a downwardly revised 0.6% gain in February. The implication is that Japanese firms do not want to spend on investment until they see a recovery in the Japanese economy. Prices that Japanese companies pay for energy and raw materials were down 3.8% in April compared to a year ago, a figure that was lower than expected and the sharpest drop in nearly 22 years. The index, which had been as high as 7.1% in August, now has slid into disinflation territory, which is worrying policymakers at the Bank of Japan who want to keep the economy from falling into deflation. Stocks were up in Tokyo but slid in Europe and the US, increasing a sense of risk aversion among investors, which helped the yen reclaim its losses from yesterday's session. The Aussie-yen pair, which is sensitive to investor sentiment and commodity markets, tumbled back to its low from Thursday near the 71 level, a 200-pip decrease from its open. The pair then bounced down off of a downward sloping line of resistance that has been set up this week. In the Eurozone, the economy contracted by 2.5% in the first quarter, the sharpest drop in at least 13 years. Companies have scaled back production and have cut jobs in an attempt to survive the worst slump in nearly 6 decades. The decline was sharper than expected. Germany, which also put out its first quarter GDP data today, saw its economy shrink 3.8%, a figure that was also weaker than expected. Italy's GDP fell by 2.4%, and France saw a decline of 1.2%. Compared to a year ago, the Eurozone economy contracted 4.6%, also the biggest decline since the Eurozone came into being. The euro-dollar pair fell in favor of the greenback on the back of higher risk aversion and the poorer-than-expected Germany and Eurozone GDP releases. The pair slid about 200 pips, pausing to counter-rally shortly at the start of New York trading. This week has seen the euro rally that began in the middle of April stall and reverse. The pair has some way to fall if the same sentiments pushing greenback strength continue into next week. The euro slid against the pound as well, breaking to a new low for the week at the 0.8880 level. The pair had been consolidating most of the week in a triangle pattern, which was broken in today's trading. There was no fundamental news from the UK today, but stocks there did increase, helping it to climb against the euro, though it fell against the dollar. And a look at a final euro pair, the euro-Swiss franc, showed interesting price action considering the euro was pressured everywhere else. After falling to set a low just below the 1.50 level overnight, the pair surged to the 1.5150 level, a climb of 135 pips from low to high, just as European traders finished their session around noon time in New York. Since it's well known that the Swiss central bank authorities do not want to see their currency appreciate against the euro, it's a good chance that today's action was caused by central bank intervention. Now let's turn to the US, which had several releases on tap. Consumer inflation was flat in April, though the core rate surprised forecasts, climbing 0.3%. Energy costs were down 2.4%, while food prices fell 0.2%. Compared to a year ago, headline prices fell 0.7%, the biggest annual decline since 1955. However, just as in the monthly figure, the core annual rate increased to 1.9% compared to the 1.8% seen in March. The New York Fed Empire Manufacturing Index improved more than expected in May, climbing to negative 4.5 from April's negative 14.7. Though conditions are still in negative territory, the index is now at its highest level since last August. U.S. industrial output fell 0.5% in April, which was the slowest pace of decline in 6 months. It's a sign that the manufacturing sector is perhaps seeing a bottom, as companies cut stockpiles at the fastest pace on record in the first 3 months of the year, and may be ready to start placing orders again. The amount of factories in use dropped to a record low of 69.1%, though that figure was slightly above forecast. The fall in April in output was led by weaker demand for business equipment such as computers, and also by weaker demand for construction materials. International demand for long-term U.S. financial assets rose in March, with China adding to its portfolio of Treasury securities. The total net purchase of long-term equities, notes, and bonds rose by $55.8 billion, which was larger than in February and also beat expectations. U.S. securities are benefiting from the flight to safety by investors in their search for a safe haven. Consumer confidence continued to increase in May in the U.S., the preliminary version of the UMich Consumer Sentiment showed. Though the current index decreased compared to its April reading, the future expectation gauge continued to climb. That means consumers are more optimistic about the future, even if currently their finances are still strained. The dollar-yen pair, after trading near the 96.15 to start the session, slid to the 94.75 level in New York trading. The pair slid in European trading following the weak GDP data from the Eurozone, which increased risk aversion. At the New York Open, U.S. stocks rose initially but then faltered, as some economists are saying that stocks will consolidate following almost 2 months of gains. The boost in U.S. stocks pushed the U.S. dollar-Canadian dollar to a low near 1.1650, but that move was reversed quickly as stocks gave up their gains and fell into the red. The pair breached its high from yesterday and tested the area just above 1.18. The loonie was flying high when sentiment was pointing to an easing of the global recession, but this week that optimism wavered, and the Greenback has gained 200 pips since the pair fell, has gained 300 pips since the pair fell to the 1.15 level on Monday. Canada's manufacturing sales decreased 2.7% in March, reversing February's gains. Durable goods industries such as aerospace parts and products, motor vehicle parts, and primary metal products were behind most of the losses in March. Next week, the fundamental docket for the U.S. is rather light, with FOMC minutes and data on building permits and housing starts the main releases to keep an eye on. Other important data includes inflation and retail sales figures from the UK and the ZEW economic sentiment reports from Germany and the Eurozone. And that wraps up our coverage of the Forex markets for this week. Thank you for joining us here at CMSFX.com, and from all of us here, have a great weekend.